For many higher income households, the decision between taking the standard deduction or itemizing your deductions has become much simpler in recent years. The standard deduction has increased significantly, and because of that, fewer households find themselves itemizing the way that they once did. Now, at first glance, that seems like it should make tax season easier, and in many ways, it does. But what surprises many families is that while the deduction decision may be simpler, the broader planning conversation hasn't really gone away. In this latest educational video, we'll talk about how tax planning often shifts once the standard deduction becomes the default, and why the deduction line itself is often just one small part of the broader conversation. Hi, I'm Joseph Eschleman, president of Towerpoint Wealth. We're an independent fiduciary wealth management firm headquartered in Sacramento, California. Here at Towerpoint, we help families make complex financial decisions with both clarity and confidence, especially when those decisions involve more than just numbers. And tax planning is a great example of that. For many families, tax season naturally brings attention to deductions, especially the question of whether to itemize or simply take the standard deduction. But over the past several years, that decision has changed for a lot of households. With higher standard deductions and new limits on certain itemized deductions, the math often makes the choice fairly straightforward. And in many cases, the standard deduction simply becomes the default. And when that happens, it can feel like there's less left to think about. But in reality, that's not usually the case. When deductions stop driving the conversation, the planning doesn't disappear, it just begins to show up in different areas. Instead of focusing primarily on deductible expenses, attention often shifts towards how income is structured and coordinated over time. Things like how investment income is generated, how retirement withdrawals are timed, how different income sources interact with one another, and how those decisions influence taxable income from year to year. These are the types of decisions that tend to shape long-term tax outcomes much more than the deduction itself. Another area that often remains part of the planning conversation is charitable giving. Even when someone is taking the standard deduction, generosity still plays an important role in many families' financial lives. The conversation may shift away from the immediate deduction and toward how giving fits into broader goals, including timing, long-term intentions, and just overall cash flow planning. The same is true when we look at things like family-related tax credits, education decisions, or retirement contributions. Many of these considerations exist independently of whether someone itemizes on their return. And for higher income households, another layer often comes from the structure of income itself. Investment income, equity compensation, consulting income, or business activity can all interact in ways that influence tax outcomes, even when the deduction decision is already settled. That's why we often say that the complexity in tax planning rarely comes from deductions alone. More often, it comes from how different pieces of income and financial decisions interact across multiple years. And that's where thoughtful planning tends to make the biggest difference. From our perspective here at Towerpoint, tax season isn't just about filing a return. It's also an opportunity to step back and ask a broader question. Does the way income, investments, and your financial decisions, the way they're structured, still align with your longer-term goals? Because when those pieces are coordinated well, the tax return tends to reflect decisions that were made thoughtfully throughout the year, rather than trying to solve everything during filing season. Here at Towerpoint Wealth, that's exactly how we approach tax planning. We don't focus solely on deductions or last-minute strategies. Instead, we look at how tax decisions fit into a broader financial plan, including investment strategy, retirement planning, and your overall longer-term goals. Often, that means coordinating with your CPA or tax professional to make sure all the moving parts remain aligned. When tax planning happens this way, tax season becomes less about reacting to numbers and more about confirming that the overall structure still makes sense. Choosing the standard deduction may make filing feel simpler, but it doesn't mean the planning conversation is over. In many ways, it simply means the real planning has moved somewhere deeper within the financial picture. And recognizing that shift can help families make more thoughtful decisions over time. Decisions like these don't need to be rushed, and they don't need to be handled in isolation. They tend to work best when they're considered alongside the rest of your overall financial life. Your income, your investments, your longer-term plans and goals, and the flexibility you want to preserve over time. Here at Towerpoint Wealth, this is exactly how we help families approach financial planning. If this is something you'd like to explore further, we'd be happy to help you think it through. You can schedule a complimentary 20-minute Ask Anything conversation with our team using the link below. You can also learn more about how we help families navigate financial planning by visiting our website at www.towerpointwealth.com. If you found this helpful, be sure to like the video and also subscribe to our YouTube channel for more financial insights from us here at Towerpoint Wealth. Thanks for watching, and we'll see you next time.